Did it just change into the Qs?
No, it went to the virtual trade. Now you're back at the S&P.
Wow. All right. It must be trailing behind by a lot. All right. Well,
Hughes is on now.
Hughes is on now.
Yep.
Who just came in as Planet Wealthy?
You can hit your contact in up there. He'll tell you.
Yeah. Is it on pause right now?
Yes.
Yeah.
Okay, so it must be caught up now because I don't know. Man, that was weird. All right. What about now? Y'all see the screen?
Spiders.
Okay, it's on. Okay, so it must be caught up. Y'all see my cursor moving?
Yep.
Yes.
All right. I don't know what that was, but that's very interesting. All right, let's take a look at the SPY. It seems like everything is working at least. We turned up here that we talked about, but one thing happens is we had one, two. We had a gap up this morning that fell on Wednesday. It came back down. It should be switching on right now. Is that happening? Did everybody get that 3 month?
Yeah.
Yes.
Okay, great. All right. So we can see here 1, 2, 3 days of bullishness, but a sideways action. Still up, but still right at that 50-day moving average. Now that's very important. The 50-day moving
You're breaking up again now.
be our last. Say again.
Now you're starting to break up for me.
Oh, man. What about now? Are you good?
No.
No. All righty.
Well, you have to talk in a continuous stream for me to tell. Can you hear me?
Yeah, I can hear you just fine.
Okay. Well, now you're okay.
Now,
Well,
you can see that this 50-day movement is our last resistance area. And we're trading right on that area again. And two things has happened. Bollinger Bands have started to come together the form of a squeeze. Now, they're far apart, but they're actually creating a squeeze. All right? So it's telling you that volatility is slowing down and that we're setting up for our next move. Now, it's very important to see what happens here because you see here we have almost like a gravestone doji, but it's got tail at the bottom, so it's really a spinning top. You had a some people would call it a hanging man, a true hanging man because the shadow is not long at all. It was really a up day, and then you had a, which was more of another spinning top. volume has been light. Now you can see our own balance volume on the spider. Got back to zero stop. So we're still in negative volume on our own balance. All right. Also, on our volume, it's still moving lower. So the volume is really light and money because there's money on the sideline right now. They're waiting to decide what to do next. So that's something we have to remember or think about as we move forward. And remember that money is sitting there. So there's a rally coming to the upside or downside in the future here. Um, we're going to talk about which way we kind of favor as we go here. You can see as we test this area, one thing that I'm seeing is that this MACD is trying to approach back to zero. Now, normally when that happens, you get a momentous move to the upside when these two lines start to cross back above the zero line. Your take place. So we have to be very careful of that momentum as it moves higher. That it could be that move that takes us, but when it breaks down, when it pops up, it could hit that top Bollinger Band and the band start to open, which leads to a greater rally in the market. So if you see that scenario play out, expect the market to move higher, and you can probably go long because the market will probably ride the bands for a few days. If we don't, we're going to look to trade short. And if down, let's say you're going to see this MACD line, especially the red one, turn over, and it's going to start to turn to the downside. All right. Your stochastics will turn over. Now, the stochastics is in that 90 area, and it just crossed there up to 94, 95 area for the first time. Usually when we start getting there at 100, we like to see it touch down a little bit and then come back up to that 90, 100, and it usually leads to a nice sustained rally. If it breaks 80, then we're coming back down. All right. So that's just something to keep another watch on. Our ADX line has been continuing to come trend down or trend come out of it. Now which tells me that our downward trend that we had when the ADX was rising still has a little bit of strength, but it has been weakening over this little move up here over the last 7 trading days. So those are things that we have to look at. We're kind of in a neutral market. So when you get in a neutral market state, you got to kind of just read both sides and have a plan for both sides. And in this case, since we're neutral, we got two things. We got a C report that is very negative, at least in the little guy's favor. We have very light volume or participation from the big boys on their side. But our indicators are giving us some bullishness because we're riding our moving averages. And let's take the class that we talk about putting it all together, that this move right here, or even that entry point into the market, all right, they kind of buy. Now, you don't necessarily have to buy, but it kind of tells you kind of either sell right here, especially when you have to, but the fact that it gapped and it was close to the moving average or the 50-day moving average, you should take forward to see what happens. In this particular case, closed down here and gapped up here, so that's why I said there's like there, because it never filled that gap, and that gap probably still there on a intraday chart. If we go inside the intraday chart, we will see that gap that's sitting there between 192 and 194. Let's take a quick look at that, and hoping to see it on the 60-day moving average. 60-day minute chart, and I want to start getting more and showing people these intraday chart work. Here's the gap right here, 1021. I think the one. Let me go back. This didn't happen right here. That's might be a little error on the chart, but let me take a look. It actually might be this one too. That was on 1022 and 1021. Okay, so that actually was the gap over here. All right. Is the 60-minute chart coming up, everybody? Mark, y'all see it? I just want to make sure we still on.
No, I don't see where, 60, okay, 60 minutes.
You should be
But
on
what are the dates below? You got days.
right. If you look at the top, it says 60 minutes.
I can see the 60-minute red.
Okay. You can see it? Okay, great. All right. Now, this particular chart is inside of the SPY. All right. There's a couple of things happening, and I just think this is the first time we really looked at it. But this is another way for us to kind of analyze and look at charts once we kind of have a position down or what we're deciding on the position. This chart is bullish right now, okay? But it has things we don't like. 1, 2, 3 gaps, all right? These three, when we start to get to the third gap, you know that it can be exhaustion. It does not mean that it can't go any higher, because if you look over the last 1, 2, 3 days, the market has been nothing but sideways. All right. So the market could go higher. And the gaps can be considered some weakness.
Reggie.
Yes.
Can you hear me?
I can hear you. Go ahead.
Yeah, I know I've been, hi everybody, how you doing? I ain't talked to you guys in a while. But anyway, you're exactly right on that. But on that daily chart,
Reggie, Go ahead.
I picked up some positive divergence on that daily chart. Now, I've been out of the market for a while, so I don't know how detailed is that, but I did pick up some positive divergence. If you kind of look at it, and it might be setting up for this next move, probably higher. That's the way how I'm looking at it.
Right.
I see somewhat of an ABC correction. It came out of ABC correction like right after the 13th of October.
Right.
If you look at from the 9:15 to 10:13, I think that was the end of the ABC. That's a complex correction. And like you say right now, like all that money sitting on the sideline, they're basically waiting for a new move. But I'm seeing a lot of stocks and I'm seeing a lot of indices, I'm seeing them in very tight Bollinger Band squeezes. I haven't saw that in a long time, that tight.
And that's what I'm saying. They're really trying to decide what they're doing. And we talked about this. Oh well, we didn't talk about it. I sent the market update on Friday or Thursday, and I talked about a positive divergence that was in the charts, and they're still there. But what I'm saying is, those positive diversions haven't manifest yet, and the longer they take to manifest, the more opportunity is that you have to become a little bit more neutral and look for a possible move that it could reverse and go down too. But like I said, this thing is definitely set up where it can go higher.
Yeah.
But it's very interesting because we had the same scenario working for us near the end of September, where this market wanted to go higher, but it wouldn't go. And everything started to break down. So we kind of in that same scenario, and we have these tight Bollinger Band squeezes, and we have a lot of things set up the same scenario. Now, one good thing, well, I'm going to say one good thing. The one thing that we have to remember that we're moving into November and December, is they have the tendency to be bullish months for the market. It doesn't mean it's going to happen this year, but it does mean that the market trends to move a little higher during this time.
Yeah, and another thing I see the stochastics is overbought, which can happen for a long period of time. It can always do that. And also another thing that I see the MACD signal strength line gaining a little bit of strength.
Right. Is approaching that zero line.
Right.
I don't know if you was on earlier, but it's approaching that zero line, which if it crosses, is going to create some momentum to the upside and cause this market to move. And then at that point, with those bands coming together, we're probably going to see it hit that upper band and this market move higher.
Yeah, man, it had a real nice correction for about a month.
Right, and we had it. We were on it. The thing is, it turned around quickly. and the move up has been very extreme on very light volume, but it doesn't mean
Right.
we can't keep going.
Right.
And we're kind of at the apex right now because the market is squeezing on these intraday charts. They're squeezing, even on the daily charts they starting to squeeze.
And
So,
I'm seeing on the intraday charts from the 15th through the 28th, I
mhm,
see 3 gaps.
right,
I see 3 runaway gaps, and every gap is higher.
every gap, right, and it's staying higher now.
Yeah.
The reason I like the runaway gaps, but I like one or two of them. When you start to get three,
Uh-huh.
if the fourth one tends, even the third one sometimes, the fourth one tends to kind of exhaust out, and that's
Okay.
it, and then it corrects.
Right.
So the fact that we have three of them is a little worrisome to me because
Okay.
if we gap again, that might be a gap to sell into for a minute. You might catch a
Right.
nice little. It might be a good day trade or two where you can catch it coming back down, and then it might move higher from there if it bounces off this area where it gapped from. So that might be the trade to do or to pay attention to because we might have an actual gap up, a sell off, but all it does is come back to the support of the gap, and then that might be the time to buy to the upside.
Might be another buying opportunity. Okay.
Right, right. Because at this point, we can catch some money coming up, but I think if it gaps up, there's a good chance for it to correct back down, or not correct, but to sell off and come back and test that area again and then move higher. And in that case, it will be the other side of the 50-day moving average. And then once you move higher, you probably hit that Bollinger Band and go from there. If it comes back below the 50, then you're going to have a failed breakout. And we all know that everybody online, we do not buy breakouts. We kind of wait for it to test that support area, and then you buy it. And usually that's what leads to your sustained rallies or your sustained sell-offs. If you move the other way. But that's an excellent observation there that you're seeing, because that's exactly what we actually been talking about between the update on Thursday and today. It's really of a neutral market that looks like it can go higher. So this S&P is sitting in a nice tight squeeze, as everybody can see from. It's really tight, and that move is coming. Now, one thing that we have this week, and so it's not a coincidence that this thing is in the squeeze or we seeing these diversions, is that you have the Fed coming out this week.
Okay.
All right, so the Fed is Tuesday and Wednesday. Now, they are expecting, they want to see the Feds continue their buying program. All right, they're expecting the Feds to announce that they're not going to continue it. All right, so how the market takes that's one reason why the money is on the sideline. We're going to find out between Tuesday and Wednesday on what's really happened. Usually that move is probably on Wednesday, so you might see another day like today where trading was kind of light and kind of sideways. So until that Fed announcement come out, a lot of times they do like to try to push the market up slightly when that Fed announcement comes out, because they expect it to move in the Fed, to the upside, because they always believe that the Fed is going to say something that's positive for the market. All right. Sometimes you do see the market sell off when the Fed comes out. So again, we at that critical point because we have light volume and we have positive diversions. So that's why I would, just keep an eye on what's going to happen here. And what I'll try to do is do a quick update on Fed Day once the Fed announcement comes out, and we can kind of reevaluate what's actually happening when the Fed Day actually come out. All right. We could take a look at some stocks. Well, let's look at the Qs real fast. One thing the Qs have did is broke out above the 50-day moving average. These little guys stream in this position. We are above the 50-day, and we held today. So that is a positive sign. It could go higher. The Qs are sideways at that 95 area. It can dip slightly, but stay above there and go and lead to a bigger rally. It was a little bit more volume coming into the Qs than on the S&P. and then you can see the MACD crossing over. Now, the MACD, that's why it's not a coincidence that we're at the Fed day, because the MACD can fail right here at the zero line, or if it crossed, that usually leads, when that cross happens, usually leads to a momentum rally or move in the market. So we just pay close attention to that area that that's happening right now in the Qs, because if the Qs go higher, I still have 100 as an area that we have to watch. If it breaks 100, then we're going to see, I believe, a sustained rally through Christmas. If it doesn't and it fails, then we're going to come back down and we're going to go a lot lower in the market. The 100 is the key area. Back in September, we talked about end of August. We were talking about the 100 area being a sell point. We caught that area. We're going to set up to see what happens again when we get as we get near this area again. You can see the 3 and the 5 the market is riding it beautifully on a 3 and 5. So it just tells you that the market definitely can continue to go higher from here. It had a nice gap. It's actually 3 gaps in this chart. It's kind of hard to see, but this is a gap right here. All right. Second, Judah 23rd. That is a gap. All right. So that is our 3rd gap, but it also could be a gap that leads to a rally before it sells off. So if you're long or have any positions long, you're okay. It could definitely go longer. If you're short, it can go short. There's more positive divergence right now than it is negative, but volume is light too, so that's something to remember. And we'll see what the Fed do on Wednesday. It's gonna be a huge thing. There could be some other things. Europe over the weekend, the banks did fail. 25 of them did fail the stress test, but they gave them 9 months to get it corrected, and they have to submit a report in 30 days. So most people on Wall Street won't worry about that. It's very interesting that they have 9 months, because that's still within our year that we talk about next year, September, that these banks have to prove that they're okay. All right. So that's just something to think about as we go forward here. Let's take a look at some stocks that people want to talk about. And then we will look at look at these stocks and see what we could possibly be trading in the future here that can go a lot higher. If anybody wants to start giving me stocks, we can go ahead and dive right into it. I hope that everybody is still hearing me okay. I know we had some issues at the beginning, but it seems like everything is working fine. All right, we got any stock? If not, now I'm gonna go ahead and start rattling some off then.
Amazon.
Amazon?
Yes.
Now, Amazon had earnings. This was already a weak stock. Earnings. It didn't participate in a rally at all. One thing I did talk about, which I didn't, was the S&P weekly chart. I know we were kind of inside the chart. We'll look back at that. But you can see that this stock was already weak. It's kind of outside the bands. It's trading sideways. It'll probably continue to trade sideways for a couple of days until these bands and everything connect. It will probably continue to go lower. If it, unless the market just totally breaks out the stock market, maybe it move higher. But overall, Amazon is really kind of just trying to relieve itself from the big move down. Of course, this was an earnings move, so you got to kind of let the stock settle back down. They missed their earnings, so it's nothing great about this stock right now. Some people might see it as a buying opportunity right here, but your ADX line picked up its strength back up. And it looks like this stock should continue to head lower. Now, it is at a support level of 280, 285, somewhere in there. So we'll see. We kind of watch it, and then as it gets back to the moving average, what it does next. All right. But again, the trend of the stock is lower.
Red. Red.
Yes, sir.
What about a short on GoPro?
On GoPro?
Yeah. GoPro, GRPO.
GoPro has been falling, man. This stock is in trouble because of the I forgot the what it was about, but this stock is definitely a short. This is beautiful right here. This move here that it had a quick. Even if you want to say that it's entering to a C wave, you could say that it's entering to that C wave. Is actually the bolder bands. The bands are starting to open. The MACD is in a bearish diversion to the downside. It could go lower. It could come back and test 50, man, in the future. It just broke the 50-day moving average today. 8 points today. That's a vicious move. It's kind of, it might trade sideways tomorrow, but that might be the time to short it, especially if you see it come back and test that 50-day moving average up in 70 area, 68.98. If it come back and test that area, this stock probably is going to trade lower though. So I would look for lower prices in GoPro.
What are you thinking, 40? 40, 41, 42?
Yeah, if you're going out further, I wouldn't expect it in the near future. But I would definitely expect lower prices if this chart continues to look like it's set up now. But I would go out further if I'm looking for 40. Now, if you're looking at 60 down area to 50, might be a good target area, 50. Because if you look here, and this is only a 6-month chart, if you look here, this 50 area was a strong resistance for 3 months here, 2 or 3 months. So that's just something. Maybe they're going to take it back to the 50. At that point, you can kind of measure what's going to happen next from there.
And the options are fairly reasonable. You know, pretty cheap. You can get in there and get you a few. And hang out.
You said they're barely readable?
They're fairly reasonable.
Oh yeah, this stock hasn't been around that long, so I could see that. You can see between June and September, it was a very tight. It was a very tight band there, and I think it hit the market in June actually, and then it broke out. People saw some value in it, and then whatever value they saw, I don't think they like it anymore. Or they're taking some serious profit. So it could be like Facebook, where it sells off real hard, comes back to near its where it hit the market at, and then people start buying it again at that point. So I would look for it to come near 50, man. If I'm looking to trade this, my target would be on 50, but I'll give it some time just to be on the safe side. But everything's turning over on this chart. I can tell you that.
Hey, Reggie.
Yeah.
What's the Fibonacci retracement on that? Starting from that breakout point at the end of August, beginning of September. Do a Fibonacci retracement on it, and I can tell you can get some better targets on it.
Yeah. The Fibonacci, which you know what, I haven't gotten to on here, but we can start. It's definitely something to look at too.
You can kind of get a retracement on that. Because
would be, it will come up yellow. That will be 100% retracement actually. We're approaching 23 right now from that top to 50% retracement.
Is it 23% retracement now?
We near the 23 right now. Well, we're not there
so it's
yet.
probably gonna give you at least 50. That would be my first target right there. That first 50.
Well, actually, no, we already got 50. Here, let
me
okay. We already have a 50-day 50. Let me reverse it up. Hopefully I get a different color. Yeah, we done got 50. We're approaching 78. This thing probably gonna retrace all 100%.
Yeah, that's what it looked like to me too, because it got a failed top on it.
Right, and that
failed
50
top, that other
right there.
Yeah, and plus you got this stock gonna get ugly because what happened with this stock too, this stock gapping down.
Yep.
So you possibly got another. You possibly got another 14 points, basically.
Possibly got another 14 points.
I'll take
like
5.
Reggie was saying, because what it is, it's gonna come back and test that retracement.
Yep.
It has to, and like Reggie say, if that's the if that's the 100% retracement, I would agree with Reggie on this. I would say it probably would do it in the next 2 to 3 weeks. If you need a time thing on it, that's my opinion.
Okay.
Yeah, it's definitely that shooting star.
Yeah, because I like this failed top. This failed top was pretty. That was pretty vicious, man. Plus, them Bollinger Bands curving down, it got to come back to that 50.
Yep.
So Riz, let me ask you a question. What is your option change showing for 90 days out?
90 days?
90 days out, 50.
If you go 90 days, you look January. Man, we that close to January, huh? Well, if you're just gonna put a target at 50, now you're gonna risk more, but you're gonna spend less, but you're risking a lot of time here. It's $4.90, so $490 to trade one option at the 50.
Okay.
If you go in the money, it's trading at 64.91. You can put a good 1,000 on the board there. There's a lot of traders out at the 50-day moving at. At the 50-day. I keep saying 50-day, but the $50 price. You got a lot of options at the 55, and you also have a lot at 60. So this thing is definitely. It looks like there's a spread on between 70 and 60 because you got 6,000 contracts on the 70, and then 6,000 on the 60. So there seems to be some type of trade on between that 60 and 70 going for this month. Now that could be something that they're trading right now, but that's just something maybe they're looking forward to hold between those prices. Now you do have a lot more traders out further at the 75 and 80, so they might have a double spread on because you also got 50 and 55. So it kind of lines up on both sides. It looks like somebody has this thing kind of locked in at certain price levels. Like we said, when we're looking at this chart, we would look for it to go lower, and you might not even have to go out to January. You might see it come down in December. December, which would be a little cheaper for you because that gives you December options are. I must have hit the wrong. No, that's December week 1. December options for 50 is $3.20. So it gives you 53 days for it to happen, and you only got 1,600 contracts. So people are definitely, out 90 days because this stock doesn't move as much, but it could get there. It just depends on what kind of risks. It's only $1.50 more to go out another 30 days, so that might be something to look at too when you looking at this. Some weakness there in that stock. What else we got?
What about Link, LKND? Or LNKD?
What is it again?
Link.
LinkedIn.
LinkedIn? I know I've been talking about this. Guess I asked you a couple questions about it a few times. And
I don't think we actually looked at it, though, have we? Because I don't remember looking at LinkedIn.
I think it's LKND. Or LNKD, yeah. What's the link symbol?
There we go.
There it is, LNKD.
All right.
Sitting in a pretty vicious area.
Man.
And I think it had already hit the area that we discussed because I think it was trading at like 2, maybe 210, and we discussed 190.
Yeah, I think we did. Hold on, let me take these Fibonacci's off. Well, actually, we can do it while we got them up. We can do a quick look at it. But Uh-oh. It did what it came back to the 190,
Yep.
but it's gonna hold this area like if this market holds. To the upside, that's a tempting niner. Um, if the market can hold, if not, it's just gonna fall with the market. At this top, which actually is from January, is the same top that failed. This is the second time that this top has failed at 230. Um, but if we take this gap here that is holding right now and go to this top, you had a perfect 100% retracement. So,
190.
and now it has retraced up about 23% off of that retracement. Now, let me go back to the trend line. All right, and I'm gonna break this thing down to a smart chart. And you can see here is the gap here, and we are now headed into a squeeze. You can see our MACD. Now this is very interesting because the MACD is trading right below the zero line. Now, me and Billy kind of named that call that the slingshot trade. When you see a trade right below that and then come back up with some momentum, you usually get a nice move. And you can see that the stock been trading pretty much sideways. Of course, this stock moves a little bit, has a high ATR, average true range of where it moves. So you're going to see these big moves, but it's really in a sideways range between basically 190 and 210. So those bands that came out of this stock and it's kind of really trading sideways, it's sitting at a support level and it's trying to bounce. People are buying right at this level. So this stock is definitely set up to try to move back towards 230. The risk reward on this trade I actually kind of like because this gap is where your risk is at. Your reward is to the upside. If it breaks the gap down, then you're kicked out with a minimum loss. You're going to take a small loss. But if it breaks down to the downside, then you know that we're going a lot lower. And you're probably going to come and touch this area down in here, which is like the 155 area. All right. And down and touch that area, you should have had a good chunk of change is made from 190 to 150. So this is leave on now you bring it up because it's set up like we talked about it going back to 190 originally and it's there and it kind of is trading up and down again. It popped up slightly, but it didn't change that view. Your cash is in the middle, that's perfect, and your volume is very even, and your ADX line is neutral. And this thing is really set up a MACD to try to push higher. Now, again, with it being at the zero line does not mean it's about to break higher. It can easily turn over and fail at that area. All right. So, and that could be what we see when it breaks to 190. So that's something to think about as we go forward here. So if it breaks the 190 area, though, the target will be 150. If it goes higher and breaks up from here, in the market, you got to have a market behind you, then 230, 240 is going to be a target area. So the risk reward on this trade, either way it goes, is high. All right. It's definitely something to pay attention to. What else do we have?
I looked at Twitter a couple of days ago, man. I wanted to get in there so bad, but had earnings coming up. Even before earnings, the chart just like it was struggling.
Yeah. Again, it's always hard to trade these stocks at earnings, but again, the stock had broke down, and then it failed here. And it looked like it wants to go. Again, the stock was down in the after hours. I believe it was down in the after hours. Did they miss their earnings today?
Yes, they did.
Okay, so you'll see the stock hit the bands in the morning, and it will go low. It'll fill this gap here, and it'll come down to 35, probably, and fill that 37 gap where people might be buying again and kind of just sit back and wait, let the options correct, and then you might have an opportunity to short it again, or you might have an opportunity to take it long. So that's just something to think about. To trade Twitter short. I don't know what Twitter does great. To me, it's just a Facebook. They're making money off advertising. Other than that, you just gotta somebody that came up with a great idea and making a bunch of money. Once looking at it's is following the market. You can see already the hands are starting to open on this thing, and it looks like it wants to go higher. It has doji today, which can break this whole thing tomorrow, because this is a form of a shooting star. I'm not shooting star, hanging man. This is a indecision day. Tomorrow could be the move to the downside or upside. In this stock, of course, this leaning to the upside with the opening, the trend up, the moving averages have crossed on the MACD. Stochastics is at that point, and then it's looking to turn back down. So we have to continue to look at this stock potential buy in the future here, because it is trying to turn. You see a lot of buyers came in after the sell-off, looking to try to see if this stock can move. It's going, if it actually pops up out of here, it's going to try to fill a gap that's on the chart, which we'll go back and take a look at. Here's the gap. It's all the way up to 82. If we get a move above 77, then we're going to go and try to break out above 82. 78 will be a good area to look at in the stock, with a stop right below the gap here, right here. Because if you look at the chart, it has two things here. You have what they call a change of polarity in this particular. This is the bullish side. This is the neutral. This is the bearish side. All right. If it breaks back up and it kind of tests this gap area again, support, and it holds, now you're changing the stock again from a bearish perspective to more neutral bullish perspective. And that's when this stock could be a potential stock. It can go up to 80, maybe $90 on Qualcomm. At that point, if it crosses above 90, then now you're looking at 100. It's just on how fast it'll get there.
Rich, what about KNDI?
KNDI?
Like it could be a good move up. You know, like it has.
Handy Technology?
Yeah.
Now, the overall trend of the stock is weak. All right. It has topped out twice at 22. It seemed like it's in a trade, and it's one of these, what they call it? The name of it, dang it. It's one of those trading range stocks. You can see the higher low that it made from May and June over here. It kind of tell you that it's going to try to move higher again. It could be one of those stocks that people are going to be in a channel. They call it channel. That's it, the word channel. Let's go back a little further. Let's what this stock been doing the last 2 years. Okay, so it broke out after as a penny stock, basically $3 stock. It finally broke out. Then from December 2013 over the last year, it traded in this low range of 10 to 22. All right, it has been there 3 times and has failed, come back down to 10. At this point right now, it got back down to 11, and it turned around. So that is a positive sign that we could move higher here, back into 22. All right, now if it continues to trade in the range, your target will be 22, and then once it gets there, you want to kind of see what happens. I like the fact that this is actually the first lower. I mean, not lower. Hold on one sec. Come on, come on. All right. If we get stock, I like the fact that this stock has made its first higher low from this bottom here. If it moves higher, which it's doing, we could have a possible breakout on the rise here at 22. It topped out here with lower highs, and that's what led to this move here. But the fact that we didn't get lower, and you got a MACD that's trying to come up, should tell you that this stock could be. Now, does this stock does it have options?
Yeah. Yes, I got another one I want you to look at after this one too.
Okay. If it has options, if the market breaks out, this could be something to look at. It's definitely set up. Trade, but you need, if I need to be out 6 months, 4 to 6 months on this thing. But it's a range stock. It's one of those channel stocks. I like it though. I like it possibly to go back to that 25 if everything continues to line up the way it is.
What about Telsa, Reg? Telsa Technologies, TSLA, it's like they can go back to the 180, 175.
Tesla.
They broke a head and shoulder pattern.
I like Tesla more.
The other thing that's hurting them now is the price of gas going down too.
Yeah, they broke a head and shoulder pattern today.
Okay.
And broke out of
I see the head.
And they broke out of the
For the
rise
people
of
that don't know what a
too.
head and shoulder is, I'd like to see a head and shoulder over 3 to 6 months. Hold on. Chart is moving slow. Here's the head. Here's the shoulder. Here's the other shoulder. All right. Broke down, and now it's sitting at an area. Now, with gas prices going lower, this is the long-term play that we like. I like Tesla as a long-term trade. If you could buy on it, I would say buy lease. If you want something long-term, in my opinion, I like this as a long-term trade because I see oil. Again, that goes back to this whole conversation off at the beginning that oil is moving too low, and that it just means that trouble is ahead for oil. Now, if oil continues to dive, then that's a whole nother scenario. But I really
I can't think of somebody. As a matter of fact, it's on Yahoo. I just saw it before it came on, talking about oil. Also, there's I think it's at the end of November. The OPEC guys are meeting to try and iron this stuff out as to whether they're going to stay together and also whether it's either a problem of oversupply or they're not agreeing on how to handle the OPEC group.
Okay. Well, I know they're losing money, so they're going to figure out a way to come together and make sure this thing, and that's normally what happens. You see Tesla, though, one way how you measure a head and shoulders, the top, in this case it's 290, you take the bottom or the right shoulder or the shoulders, and then there's a neckline. So this is the neckline, and you have 240. You take 240 and 290, that's 50. So Tesla's target is 200. It's trading at 20. All right. Of course, this is a very news-related stock, which is always, it seems to be always in the news some kind of way. 200 happens to be a support level right here. And I blow it up. 200 is this area here. All right. So, and that happens to be a gap right there between these two 2 days there. So 200 is a very possible target on this in the future here. So keep an eye on it. trying to clean up this chart here so we can look at it. This gap here is it's not giving me the. Trying to blow it up again for you. All right, it won't let me do it for some reason. Oh, did it, but not in the right area. All right. So, but you can see here 200 is a support. All right. And there's a gap there. It actually gapped above there. That's actually what led to the breakout in Tesla. When it hit those psychological numbers of 200, it actually, so 200 is another, again, that's a psychological area. So I could see it coming back down to 200. The indicator, stochastic, MACD is all weak on this stock. You have a gap down off the so you're definitely looking at another probably 20 points in Tesla to the downside. Your bottom Bollinger is opening. If your top one open, that's another sign of some weakness. So I can definitely see it going towards, I can see the stock going towards 200 or a little bit slightly below before settling down and reversing. Your volume is even going negative. So maybe there's even something more serious that's going to come in Tesla that causes it to even go even lower. All right. So I would pay attention to this stock as a short at the current moment, and just see if it breaks down. All right. It did stop at 215 last time, which is support area off the 50. 213, you can see it stopped over here at 27. This low is 213. So we are approaching that area. It looks like it's going to take that right out and try to approach that 200. So that's just something to look at, and definitely as a short can be shorted. What else we got to look at?
CMG.
CMG today. I don't know if it was news, but it needed to come back. I still believe that the thing can go lower, especially off the. It has not filled this gap yet. This gap is still here, sitting. It's 596. It moved up near the 50-day moving average today, or not the 50-day moving average. It was the. It wasn't a daily chart. On a weekly chart, it moved up. It's inside the bands and away from the bands. So this is a relief of the move that it had. The 630 area here, it actually closed right on it. It needed to close above. I was actually watching that to actually get back into that area of strength, I call it, because this area people wanted to try to hold it. It did not get back above there because the low was 631. It traded there above there all day, 32 for the last hour or so, 2 hours, and then it failed. It needed to get and close above there, and it didn't. So it's something to keep an eye on. It's light volume that's in it right now, and it's probably going to try to trade sideways at this point before trying to move higher. I still believe that it can come test that low, especially if the market decides to break down. But they had awesome earnings. The earnings were too good, and their guidance, because they were too good, they had bad guidance for next quarter or for next year total. So that's just something to remember too, because the guidance is very important when it comes with the market, dealing with the market. Any other stocks to look at right now?
What about Alibaba? I don't know if you have enough there to determine anything.
What is Alibaba's symbol?
BABA.
BA.
BA.
Wow. Really taking off since the market turned. Really not much here. I look at the fact that it's outside the band tells me that it's going to settle down. It's bullish. They stock above 100. They want to see it above 100. At that point, it'll probably settle down inside 100, and then you probably can look for a little sell-off and an opportunity probably to buy it again or short it. But at this point, it's not enough data to really try to gauge it by on a chart. What else we got?
What do you think of Bank of America?
You can see, I'll look at Bank of America 2 seconds. Baidu's trading in this squeeze that it's headed into, and it's trying to out. It has some weakness up at this top again, and it wants to break out to the upside from here, but that may be sitting on top of that line. Could be some strength coming in. Volume is very neutral. ADX line is just very weak. So we can look for a breakout above 225 and then a retest. If it retests then, we can look for Baidu to go higher in the future, and we can look to buy it. If it breaks down from here, then it's coming back to test the 200 area again. Then possibly go a lot lower. So that's another stock that's kind of neutral that we should keep our eye on. Bank of America. Did they report yet?
Not sure.
I don't believe so. I don't believe so.
Yeah, I don't think they have reported their earnings. They're pretty weak stock here. It moved up slightly from 15. I don't like this bank stock. It can definitely go higher. I mean, if you got long-term options or you in this thing with the actual ownership of the stock.
Yeah, Reggie, they reported on the 15th.
On the 15th.
Yeah, that big red candle down. Yep, right there.
Yeah.
That was
people trying to buy it because of the Fed did a couple of weeks ago. That's what the Fed came out and said. It's at the 50. It's on 50. It can move back and try to touch the top here. I wouldn't trust it too much. Look at what the stock has been doing. It's been doing nothing. And this is even doing while the market has been moving higher. It really did anything. It moved in August, September, but that was it. I wouldn't mess with this stock. It could definitely go higher, back up, but it's not worth the money or worth the time. It's going to drive you crazy to trade it.
Okay.
You can definitely invest in it, but again, it's a bank, and that's always very dangerous to invest in a bank. Volume is not great. I wouldn't touch it. If anything, I would be long-term short Bank of America. Visa, MasterCard, these stocks bounce back. Again, these stocks are weak to the rest of the market. Universities, MasterCard, a lot of the credit card stocks are weak. It has a gap here that is still holding. And again, just like before, until it breaks that gap, I'm not touching these credit card stocks at all. I would look to short them as it moves up here. It could try to break out. It has a divergence where it could go higher, but I wouldn't. I can't. These charts are too bearish. And when these things move up, we want to be looking to short them. On these bearish charts like Amazon, the Stock of America, Visa, MasterCard. These are all shortable stocks that you could look to the downside. Where we got the upside like LinkedIn, GoPro was a bearish stock. Candy was a bullish stock. Baidu was more bullish. So you got, again, this is what you're going to get in a neutral market. Some stocks you could trade lower, some you could trade higher. MasterCard it's just a weak stock, and it's really not going anywhere. You really have to wait for a breakout before you even touch this stock. As it moves higher, you always look to get ready to short it. X, which has started moving in the past, but go back down, and it's kind of just breaking down here. Caterpillar, we helped the market rally on Wednesday last week with their awesome earnings that they reported. Got back to resistance. As you can see, the change of polarity there at the top here. It broke down. It is now back there again. So we really need to see if it can break back above that area. At that point, then you can see prices from Caterpillar. But right now, it could be setting up for another opportunity to short Caterpillar. So just something to keep an eye on. Caterpillar could become another short and go lower in price, even with the earnings that they had. It's very interesting that it's back at that point of resistance right now. If it gets above there, that might be an actual call. That might be something we'll look into. If it breaks down, if the market is breaking down, then this would be a definite short because you got a lot of people that try to jump in, especially the little guy, that try to jump into this stock. All right. Anything else? Just make sure always pay attention. Who?
Facebook, they're supposed to report tomorrow. Earnings.
Uh-oh. I think we talked about the stock going higher last time we talked. It has kind of went higher, but really hasn't did anything. It's sitting on the bands to move higher. If it breaks out here, it could go. It had a nice retracement back to the gap. This is almost like LinkedIn, same thing. And then it popped up. When is LinkedIn reporting? There's got to be right behind them, or right, maybe in the same day, actually. To look at. Now I think about it. I didn't even think about the earnings. So Facebook.
And Gilead. What about
who?
Gilead.
The pharmaceutical?
Yes, GILD.
Yeah, I don't mess with
Hello?
pharmaceutical.
Hello?
Yeah.
It's been on a tear. Well, I mean, it's been bouncing back and down. I mean, it went down to, after the sell-off, it went to 92. Now it's back up.
Retracement back to the support level, and it's been on a tear and it's breaking out. It's good to go. I mean, it's a good stock. If you in it, I would stay in it until it stops. I don't know if I would buy it at this point. I would wait for it to retest 110 area. It's breaking out right now, and then if it holds that area on the retest that area, you look to.
Well, tomorrow they're reporting.
Oh, well then yeah. Well, you definitely got to wait till after tomorrow then. Definitely got to wait till after the earnings at this point. But it looks like they believe it's gonna go higher, or something positive gonna come out of that report.
Bridge.
Yes.
How much stock do you put in the XLY and the XLF?
These are those funds? The X.
Yeah, they kind of, normally they roll with the market, but they're lagging a little bit.
You said XLF?
And XLY?
Well, the XLF is a financial stock. It should be following the market. Again, this one's right at the 50-day moving average, just like the market is. So it's going to follow what the market does.
Okay.
And that's exactly what it's been doing. You can see the sell-off that it had. It has almost the same setup chart as the market. So the XLY, same thing. Yeah, it's a little bit more extreme. That's because the S&P is not as bullish as the Qs are. Now, one thing I do want to take one last look, and then we're going to go ahead and get out of here. Is the Russell. You can see the Russell has been teetering out, and this is a weak. I mean, this is very interesting because your MACD is approaching to try to break out. It's the weakest of all the indice charts, the major indice charts that people look at. Is at the 50. If it can break above there, then yeah, we could possibly have a breakout going. But right now, everything is pointing towards sideways neutral, and that we're at that very tipping point between us turning back down and going lower. So we just have to really pay attention to what's going to happen the next couple of days with the Fed coming out, because this Russell 200 is becoming weaker, even though our MACD is trying to point up, our histogram is coming down. So we just have to pay attention to what's happening here over the next couple of days, because we're at that tipping point right now. All right. What I'm gonna try to do is I want to try to start doing more updates now that I got the computer. We have still not had the baby yet, so I'm expecting that to happen any day now. As the actual due date is November 5th, so we're actually approaching that due date. Usually they say you only got a 3% chance of actually hitting the date, so we'll see what happens here as we approach the date. But I want to start doing little quick mini updates in the morning and start sending them out so you have them during the week. So I'm going to try doing a little bit more of that during the week, and then start getting some trades out here as we go. Since we're in this neutral to bearish or bullish range, this is a perfect opportunity to add some trades on, or add to trades, or initiate some new positions. All right. If anybody got any other questions before we get off here?
Great.
Yes.
Where y'all registered at? What stores are you registered with for the bank?
Oh, you know what? I don't think I don't think she registered anything, because I had to ask her, because we have everything. I think what we was gonna do, she was just gonna tell everybody to get gift cards, because we have everything.
Okay.
All right. Any more questions before we get off? All right, everybody have a blessed week. Happy trading, and I will talk to you later in the week. Remember, you can always email me at contact@planetwealthy.com or ourhomes@creativeprofits.com. All right? Everybody have a wonderful week.
Good luck with the delivery.
Yeah.
Thank you.
Yeah, good luck.